Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is James McDonald, CEO of Hercules Investments, with an update on Nasdaq-100 and VOLQ activity, as well as hedge strategies to trade those trends. James, it's great to see you as always. Welcome back to Trade Talks, and you finally got that volatility and chop that you've been looking for in the Nasdaq-100.
Yeah, it's an interesting time. We've seen such a powerful bull market through the pandemic and through the prospect of the reopening trade. So much money chasing gains, so much new activity we've never seen before between liquidity injections from the Fed and then these work from home stocks and then the GameStop debacle and all of the new elements in this market within a bull market context. And what we've done here at Hercules is step back and say, we can't predict what will happen in the short term here because there's so many unprecedented factors. If we take a broader look and look at a 10-year chart, we see the FANGs up 300-400%, the Nasdaq-100 up almost 350% in the last 10-year period, but almost all of that was from 2016 onward. And so if we condition ourselves to look at history and look at macro themes, we're ready here for some significant pressure in the market. And I think that makes VOLQ a perfect timing instrument from a portfolio standpoint, from a defense. Obviously, we saw the NASDAQ with some pressure at the beginning of the year, end of January, end of February. We've seen rotations from capital moving from tech to value to small caps. We've seen dislocations in terms of how big indexes behave. Obviously, we've had a turnaround in the Dow. We may close at a new all-time high on the Dow and the S&P today. NASDAQ is holding support, but the Russell 2000 is continuing its pressure. And so we've seen money move in and out of these big indexes. And if we just take a big picture look, particularly the last 5 years of the 10-year chart, we've seen an unprecedented bull market. We really think it's a good time here for some exposure to volatility through VOLQ from a defense standpoint.
And James, that's a great point that you make, because we have such short-term memory, particularly how fast markets move these days. And then you also have the social and retail component, as you had mentioned before. Are there any clues from VOLQ that you're seeing specifically as it relates to the volatility complex that we could continue to see more chop, or things may slow down as we look out to the summer months? Is there anything new there?
It's a good question. And what we have to really understand is that these are unprecedented times. And we saw the NASDAQ come off. We saw it stabilize. We saw it come back. You know, NASDAQ is flattish now year to date. We're here about to close out the first quarter. And so where we're looking for VOLQ for protection, more so than upside potential, is in defense. If we've seen headlines come in and move the market to a negative stance. Obviously, the 10-year yield story was big. Now we have this problem with Archegos with, potential, how should we say, contagion issue. Some hedge funds are getting into trouble. We've seen margin calls not being met. We've seen big names, big banks involved. Discovery Channel, which was one of my picks for a good runner, has gotten hit 25-30%, overnight based on a contagion issue having nothing to do with the company itself. And so these risks are entering the market. And while the NASDAQ is flat year to date, there could be significant pressure. And VOLQ is kind of a defense tool for us right now, as opposed to a speculative upside. This market has so much bullish energy. As I said, the Dow and the S&P may hit a new all-time high today after seeing pressure last week. So we just want to be defensive and cautious, and VOLQ is a perfect place for that. As I said, those big names in the Nasdaq-100, the FANGs, these companies are up, 300-400% in the last 5 years. And most of that has come, after COVID. And so we really want to be defensive and cautious.
And James, to wrap up here, of course, you can express this through VOLQ futures from the CME group. What if you don't have a futures account? Are you still able to express this opinion, whether you're looking at index options or the Qs as an example?
Right. There's a big complex of opportunities to provide defense around the Nasdaq-100. They're the triple Qs, those index options on the ETF, as well as the CBOE listed cash settled index options for the Nasdaq-100 NDX symbol. Those are all good ways to provide defense. And you don't need to get big exposure there for defense, anywhere between 7 and 10% exposure to those put options with long dated put options deep in the money should give enough protection if we get into trouble here at the NASDAQ.
All right, James, great to see you as always. Thanks for the insight, and thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.